Hi, this is Mary Kopczynski, the CEO of RegAlytics, with your update on this week's 24,476 regulatory alerts. First and foremost, happy Rosh Hashanah to all of my Jewish brethren out there. I will be continuing my breakdown of the One Big Beautiful Bill, but also I'm going to be walking through some of these recent visa changes because I think there are a few items the media isn't covering that you should know about. So, starting with the One Big Beautiful Bill, and please remember, I have a law degree, but I don't practice, and I'm not an accountant. But today's topic is excess business losses. So here's the deal. Ever since the 2017 Tax Cuts and Jobs Act, non-corporate taxpayers, individuals, partnerships, and S corporations, haven't been able to deduct unlimited business losses in a single year. So what does that mean? If I have an LLC, which I do, and I make $1 million in profit, I have to pay taxes on the $1 million. So what people do is they create expenses or additional losses to make it look like their company is less profitable, so they pay less taxes. So maybe you buy a bunch of computers, or you book something like a conference, or you sell an asset for a loss, or whatever. But on the flip side, let's say you have a really bad year and you lose $1 million. Well, that offsets your income, so you can get a refund if you paid too much, or at least it'll reduce your overall tax rate. But the government doesn't want to issue massive refunds. So what they did is they temporarily capped losses at $250,000 for an individual and $500,000 for a couple. So that means if I lost $1 million, I would get a refund for whatever the equivalent tax rate of losing the cap. So let's say it was me alone, then it would be $250,000. I could mark it as a loss that year, and then the remaining $750,000 would be what is called a carry forward loss. So if the next year I did really well, I could say I lost $250,000 from my carry forward, right? And then the next year I can again lose another $250,000, and so on and so forth until I use up all my carry forward losses of $1 million. So this was originally a temporary thing, but the One Big Beautiful Bill first makes it permanent, and also the numbers are higher. So the cap is $313,000 for single filers and $626 for joint filers. Okay, so a little change, pretty minor, but interesting to know. The regulators of the week is the Department of Homeland Security and USCIS, which is the U.S. Citizen and Immigration Services. So you certainly by now have heard about President Trump's executive order putting a big sticker price on H-1B visas. So little known fact, I did a summer stint at Fragment Del Rey, Bernstein & Lowy, one of New York's top immigration firms. So I did learn a little bit about U.S. immigration. Not to mention sponsoring a few H-1Bs in my decades of entrepreneurial endeavors. So I know that the leap from a formerly $2,000 to $5,000 H-1B to a $100,000 H-1B basically means that only the top companies in the world will be paying for talent to come into the U.S., period. But it did get me curious, as the news often does, and I took a look at every alert around the world having to do with visas, from China to Brazil, from the UK to the US. And look, visas are all about creating wealth. So China, for example, is really focused on lightening up visas to attract more tourists. And Qatar is trying to deepen their relationship with Serbia, so they're fast-tracking visas from there. Meanwhile, the US is fast-tracking visas from Hungary to show our appreciation to Viktor Orban. But when it comes to the U.S. H-1Bs, that's not the only issue. Did you know, for example, that there are also H-2Bs, and that's essentially for lower skilled workers, and there have been gripes this week even about H-2Bs, including the United Food and Commercial Workers International Union, which put out a study about its negative impact on wages and working conditions in the meatpacking industry, which employs around 56,000 workers. And that report shows that H-2B workers earn lower wages than U.S. workers in similar roles, which results in what they call $2.2 billion in wage theft since the year 2000. Also, one of the focuses of the Department of Homeland Security regulatory agenda has been EB-5 visas and reforming those. So EB-5 visas are visas for people in foreign countries who come to the U.S. to create jobs. So there's a minimum threshold of how much money needs to be invested in a U.S. company, but also a minimum of 10 U.S. jobs must be created. So what has been talked about less in the media is Trump's executive order on what he's calling gold visas. So it's basically a visa granted if you pay a gift to the Department of Commerce, period. There doesn't seem to be any other threshold or requirement or other criteria so far. I mean, it has a minimum amount. It's like over $1 million. But it's also unclear whether this is a replacement of the EB-5 visa or if it's in addition to it or what. So anyway, that's it. This week for RegAlytics, we have the global supply chain of the world's regulatory alerts in one very easy to use place. If you need a solution for anything related to regulation, give us a call.